General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. Today's Tuesday the 12th. It's an expansion, although a weak one. We closed here, so it's being below Monday's good enough. This is interesting. Probably don't need this gap anymore. Probably can watch this, but expansion. Engage. Medium. We got conditions, price delivery, time theory. We didn't completely get that. This is like a flat bottom too. Yeah, this is weak. I couldn't put no anchor on the flat bottom. It could be Monday. This is strong buy. It could just be a stop hunt. So anchor point is not being confirmed yet. Expansion playing out, yes. Monday could be the anchor for the week. 10 minutes hit today. No, Weird to draw liquidity, but not determinants. It's NASDAQ. 15. Get out of this. Take this. Mm, This already got wicked here. Let me make this able to be seen. Open, push up, regular trading hour, hold, push down, crazy V shape. Uh, mm, and how far up did we come? OTE. So we came up to 79. This is 88 here, right around regular trading hour open. So I don't need to add that line. I can just use this one. Add some now right there. Explosive day. Accomplishing a much needed goal of retracement and grabbing sell side liquidity. Let's go to the hour chart. Mhm. So let's delete this since it's all kind of other stuff to see over here now. Now, from the perspective of the entire weekly range, we still can have higher retracements. You see, we're kind of like at 50% of Monday, Tuesday range. I think retracements and well, not even retracements. We already did the retracements. I think maybe a little bit higher and then lower prices. I don't think we're done yet. Previous week EQ looks interesting. Price already retraced. Back to premium of the weekly range. We'll look for continuation and setup to the downside. Through a logical place for that to happen. We already hit this. It's 50%. Really watch this candle. See how price handles here. Mm, control. Oh no, wait. Leave it only on this level. Control into only. And I would target this. So much to do down here. If we start getting up here, it's like cancel all that. We could be targeting these highs, 29.5. This would be more like line in the sand. But from here this week to its open price, I feel like the setup is show up right there. Bearish OP should give, should hold if we are to stay bearish. Let's look at SPX. The 15-minute. And we closed above New York AM session. And that is a huge difference here. Okay, my previous weeks looks backwards. I'm sitting here like, what's going on? It's much better. Monday started the week. We got both sides. So Monday swept over here. Now we got both sides of this consolidation swept, which is still cool. Let me tag here. This is 50% of the original consolidation. Yeah, that's very interesting. So this was the first pass through. This was the second pass through. So it's going to be key if we buy up or sell off from here. This S&T is not really telling me. This thing wants to sell like that. There was no panic or nothing. Push down. What's this? They voted in Fed Wash. Market goes up. So Wash is bullish as far as the context right now. Even though the inflation came in bad, people are probably like thinking or betting on the rate cut. See if the CME Fed Watch changed anything just because we voted him in. No, it didn't change. So they already got it kind of bet in, priced in. PM session. Close the room. PM session. So session S&T. Again. Let's go here. Push down. Kind of back at 50% on Monday's range. Premium off the weekly range. Completely used this, then left it. It don't look like it has conviction for either side of the market, really. How we stand at the 50%. It's drawing in buyers for sure. It could just be a trap. Keeping on logical order of delivery. Looking for continuation sales. Again, trace me over. Price will turn around. Premium. And we go lower. Look at the daily. Okay. So we did get some action here at the order block. And This is the 50% of that candle. And we didn't close below, so we don't got no order block here. And it's like a small gap here. I'll watch here where we took the wick at, because below here it could be like buying opportunities. As far as selling, I don't think your previous week's high be the level to watch for sales. You can come up here, bounce off. You can form fit this rejection block or this wick. But I doubt we come up here. If we do, this will be interesting. If we don't react off of previous week's high this week, so I will be looking at. No close below Monday low. Look at y'all. Look at y'all. This morning, the Doji Day. Sales from previous week's high or week's low. To target Tuesday's low. Or Monday's low. For low hanging fruit. Low hanging fruit projected. So Monday's low still a target. Monday low here. And you gotta get the whole thing. Alright. Stupid stocks. Stupid SPY. We look at that on the 30-minute. Came back to regular trading hour Monday. 50%. Closed higher than we opened. Could we just rebalancing? Yeah, we at the moment of truth. I still prefer to see lower prices to target this internal range liquidity. What time is this? Wednesday, 9:30. And that's PPI. CPIs today. We haven't had PPI in a minute. Kevin Walsh gave us the Turn around. Marsh was nominated on the Senate, pushed up the rest of the day. Boom. Let's go. QQQ. This week's created a fresh order block, just like the regular NASDAQ. We got that same S&T. Yeah. Still sales here. Let's look at NASDAQ. I mean, not NASDAQ, but NVIDIA. Because it could be a party pooper. Yeah, if we're trying to push. So, it's the first candle, CPI. We wanna go up because of earnings. It's pushing down because of CPI. Beautiful reaction here for the buy. Let's look at. There we go. NVIDIA. Okay. I was trying to remove earnings. CPI did a good job holding it down. With the Kevin Wash. Turn around could mean something. Turn around could mean something. It could give investors confidence. Rate cuts on the menu. They could want to buy the highs. You know that doesn't make any sense. Move down, but the Kevin Wash turn around could mean something. Could give investors confidence. Rate cuts on the menu. And they could want to buy the highs. The engagement. To the sale. To the Venom model. Venom model sale in Asia session. Yes. Follow the plan. It's not applicable because I followed the I'll do different next time. It's not happening because I did good. I do well. Tell myself too much out. I've seen it kills current options expiry week. That's why Asia session is good. Did the framework play out? Yep. What do we learn about pattern narrative with myself? Stick to your own plan. What will I watch for tomorrow? PPI and more sales. I believe that's it. All right, that's that on that. Y'all have a good day. Peace.